If you didn't get a chance to see my Friday video, go watch it. I'll link it at the end of this video. Again, I talked about the sequence count sell signal that formed on the S&P 500 on Friday. This is telling us that there's price exhaustion. I talked about the 60-minute charts. I talked about the daily charts on the S&P and NASDAQ. I bring different things in this video, some things I wanted to share with you, some things I'm looking at. If you didn't get a chance to watch the other video, go watch it. Again, I will link it at the end of this video. Rally that I've predicted to new all-time highs. I told you back in August. Again, we talked about the sell-off here, expecting side, but I told you again we're going to go back and fill the gap on NASDAQ. So S&P is going to go make new highs, and then we had the August peak, and we didn't make new all-time highs, and we sold off again. Predicted our signals triggered a sell signal at the peak, and then I told you down here with the jobs report we are still going to go make new all-time highs. Expected to bottom the following week with the inflation data that happened. So again, the rally that we expected from here has now happened to new all-time highs, and the sell-off over here. We have the S&P still in a risk-on environment, okay? Even with the triangle that formed corrected sideways, I talked about that on the 60-minute chart, we still remain in a risk-on environment. So there's still the possibility of going up and hitting this upper boundary of our rising wedge there into next week. I've talked about a rally to new all-time highs will be followed top, and a process is likely under construction right now. Well, I predicted a rally. I'm also predicting a top and a reversal. And again, you've got a very reliable reversal pattern here in the form of a rising wedge. So again, this is likely going to play out very soon, but probably not done yet. Last update, I talked about the bullish inside day on the candlesticks that we got on Friday. The 9 count, we can go a little bit higher. My guess is we will. But when we start breaking down from this, start the reversal process, we'll move back into a risk-off environment. So I'll be watching closely. The S&P is making new highs. Risk-on is not making new lows, and there's a divergence forming between the two in the more recent price action. The S&P is moving to a new high. We're not moving to a new low. And then also the larger move here from the August peak. There's a divergence developing. The S&P is moving to new highs. We're not moving to new lows with the risk-on signal. So again, it is suggesting that a reversal is soon going to happen. We have a very similar signal at the July peak. Again, there was a divergence between the two. We didn't see new lows here, but we did see, again, in the more recent price action right there, a divergence at the very peak. That's when the S&P diverged with NASDAQ as well at that July peak. Remember when I called the July top on the July 10th peak there the day after? Warned you it was going to happen before it happened. Told you S&P is going to go make a new high, and they're likely going to diverge. They did. This looks very similar to this. So again, this led to over a 9% sell-off, just under 10% on S&P. This will likely lead to a reversal because of what we're seeing in the weekly time frame, but it led to nearly a 16% sell-off on the NASDAQ. If we start seeing the breakdown of the rising wedge, I would expect that the S&P trend would change and that we would start seeing risk-on move into a risk-off environment. So I'll be watching closely. But warning signs with the divergence between the two. Please support the channel with the link directly below that allows me to be able to provide you this information. If you follow the link, it'll take you to a secured site. You can donate any amount you want, make it a recurring donation. If you do that, I thank you. The money made on YouTube, in order to do all this, the money made on YouTube is through sponsors. I don't want to go that route. I don't want to sell you things. I want you to send you to websites where they want to charge you triple commissions for gold. The kind of stuff that goes on. I don't like shady deals. It's ask that you simply support the channel. I need to hear from you in order to make it work. I just put it all out there and ask that you partner with me. If you could take a moment to do that, I would really appreciate it. I thank you for your consideration for that. Hey, if you didn't watch my video earlier in the weekend, at the end of this video, I'll be covering things in this video that I didn't cover there. Go check that out. Daily charts, a 60-minute chart, looking at some other indicators, other signals. I told you after I called the July top, we were going to eventually go fill that gap on even though I was expecting more downside, we were eventually going to go fill it. Here we didn't move to a new all-time high to fill the gap on NASDAQ, and I told you again, this was not the reversal. We're still going to go make a new all-time high, and even in the triangle, I told you, again, while signals had turned bearish briefly, momentum, I told you, we're still not done. Last Monday, we filled the gap on NASDAQ, and now we're looking for the topping process to come to a conclusion. Signals are still bullish. This represents momentum. This is the short-term trend. Again, this is just swing moves here intraday, and balance of power is still positive. The intraday signals will begin to turn first. You know when that happens. I draw in the rising wedge. Again, my guess is we're going to go up and hit this upper boundary and then begin to turn. The stochastic seems to suggest that. I think the time is short, but again, these are going to be the first signals, momentum on intraday charts to begin to turn. Right now, they're still positive. Signals going back and forth have been absolutely amazing. But I'm looking at, again, my short-term swing moves here. I'm looking at my short-term momentum indicators. And again, they're still positive right here. So again, while we have a divergence, I don't think it's quite done yet. I think it will possibly complete very soon near that upper boundary of the rising wedge in all likelihood. I think the stochastic is suggesting that. Absolutely incredible turns with short-term swing signals. Divergences marked the turning points at these other peaks, as I've talked about with the RSI. And again, I think that it's probably not done yet, but under construction here. But I think it's going to finish soon. The bears are already complacent. The bulls are complacent, but the bears are not complacent already. They will be by next week when this is finishing up. Again, my signals remain bullish. Warning signs, this is about to come to a conclusion. I think it will. But at the moment, my signals are still bullish. So again, I'll be watching for them to turn. The divergence is completed on intraday charts. It likely will. You can clearly see on my charts that I'm showing you, momentum signals intraday are still positive. Divergences have already formed here on S&P. We did move higher. Divergence is probably not done yet. We're talking about the divergence here on the RSI. Intraday, we have momentum line still bullish. It's still blue. It's still going up. We've got the divergence likely already happening. It's already happened, but it's likely under construction. A little bit more work to be done, like we had over here, probably, even though the divergence formed immediately, again, you got another reference point over here at the July top. Ended up diverging with the RSI, forming a triple divergence here, and when that was done, then the sell-off began. I think we're going to go up and hit that upper boundary here of the rising wedge and complete this. I think there's a good chance that happens, Monday, Tuesday, Wednesday. We could see the rising wedge break down with earnings or with tensions in the Middle East. Good chance we're going to see Israel respond to Iran, and that could rattle markets for the short term. The catalyst may be. Again, this divergence is telling you, hey, it's under construction. Already got it. May not be done yet. But again, I'd be watching for the momentum to flip here. I'll tell you when that happens. And then the breaking of the trend line, you'll know when that happens if you draw the trend lines, your charts. And then we'll be looking again for the swing signals to begin to change. Cloud flipping back to red and the bars flipping back to red like we had over here and like we had over here. Now, again, the signals will turn in the daily time frame. They do that with intraday charts, but intraday charts, it will likely happen first. It happens the same day, and they just do it earlier in the day. They do it the day before, whatever it may be. I'll be watching the intraday charts. I'll be watching the daily charts. And I'll be looking for the momentum line to turn in the daily time frame. Then I'll be looking for the bearish reversal conditions with the clouds earlier in the video. But we are getting warning signs to be watching for a possible top. We're getting warning signs here in the daily time frame on the S&P 500. We have this divergence right here that has formed. Again, it may not be done yet. We may turn up here slightly and then turn back down and go up and hit that upper boundary. The rising wedge again, it's certainly possible, regardless of how it unfolds. And we don't have to do that. Reversal starts immediately. But again, I'm just telling you, the signals, bullish. Divergences are forming. Predicted the rally. Again, did the sell-offs, the rebounds back up. Told you that we were going to make new all-time highs. We didn't in August. Now is the time to be watching for a peak. It's likely going to be with that rising wedge pattern, and then we're going to see that break down. Opportunity, but again, when we see it break down, it's probably going to be pretty ugly. It might be a pretty violent move. Rising wedges do have a very good success rate, a really reliable pattern, the rising wedge I've been talking about. But again, this is warning you, hey, be on the lookout, be on the lookout. That's what it's telling you. The Divergence is saying, be on the lookout, be on the lookout. And again, see the stochastic continue upward, probably go a little bit higher, hit that upper boundary, and then again, we could turn at some point next week. We'll be watching the indicators, but again, see the momentum flip intraday, then we got to see it flip here in the daily time frame. Signals are bullish. I told you again with the shaded area here that a squeeze move was getting ready to happen with my triangle. It happened. We had an upward resolution. Watching to see if we're seeing sell signals form like we did back over at this peak. Didn't get it here with this pullback, but we did get it here in the construction of the triangle. Signals flip back, momentum flip back, as we predicted would happen. So again, this is saying, hey, be on the lookout. Momentum could be getting ready to turn. That's what it's warning you. But I continue to tell you exactly what I think. That with the bullish inside day, divergences forming, intraday charts, I don't think they're done. I think we go up and hit that level, the upper boundary, and then I think we're going to turn shortly thereafter. Be days away. Signals remain bullish, even though they predicted. With momentum turning back to bullish, I've been predicting new all-time highs. Also warning that a top's going to form and a reversal is going to happen and likely set up a major top. My personal belief is that's going to be the case. I'll be watching the signals closely, but again, you can see the divergences as well as I can on the indicators and momentum. Again, we might be forming one right here in the most recent price action here. Now here's the NASDAQ. Again, we fill the gap. I'm looking for a topping process surrounding the gap fill. My guess is we will not exceed the peak over here from the July 10th top. But again, the divergence still may be under construction. We still may see it turn back up here and still try to form a divergence in the recent price action, or maybe a divergence with the S&P. The S&P does go to higher, a new high, but we don't get it with NASDAQ. They could diverge here as well, just as they did back at the July peak. I'll be looking for topping signals. Again, signals continue to nail it. Moves back and forth. A couple of little T's suggesting a top is coming on S&P. We don't have that yet on NASDAQ. It could show up. Next week, we have it on the S&P already saying, hey, be on the lookout. That's what the signal is telling you. It shows up after other signals over here. We got it, the little T there with the gap lower after the reversal already began. It shows up early. Sometimes it shows up during. We'll see what happens, but I'm looking for clues. I'm watching the momentum line in the daily time frame and on the intraday charts. We've got a divergence. Do we now confirm a lower high right here, or do we still better define the divergence? You know, I talked about we had a little bit of volatility after we filled the gap with NASDAQ here in the daily time frame. We started seeing some red bars on the oscillator. Started seeing the stochastic roll over, but we dropped below the 10. We bounced off that 20-period moving average. I talked about this, and I told you we still might form a divergence on that 60-minute chart, and I told you might see the stochastic turn back up. Well, the stochastic's trying to turn back up. So again, we'll see if we form that divergence on the 60-minute chart, and maybe here on the oscillator, maybe we get a couple of green bars and then see that complete there. Looks like the oscillator moved just slightly higher. The divergence on the MACD, but the histogram turned back up, and again, this could little divergence right here in the most recent price action here, and the larger one with the previous peak over here. My signals remain bullish. Again, over here we formed a bull flag. I told you that again we were forming the bull flag. I still thought we'd go higher. The S&P was forming the triangle, and sure enough, we flipped the signals back to bullish. It was bearish, back to bullish for one day, back to bearish, bullish, and again. On the S&P, just kind of going sideways. We had a bull flag here. It ended up back testing and breaking out. We had, I've talked about that on the intraday charts. We had the triangle on the S&P 500. These divergences in play on the oscillator, the MACD, but again, stochastic turning back up. I talked about this last video on Friday, and again, I talked about it before it happened. I said that is a possibility if we get those divergences forming on the 60-minute charts. We did see it happen on Thursday. We did get a divergence on the S&P, but then we saw the rally, begin to fade away, and we ended up flat. It might form a better defined divergence going up and hitting the upper boundary of the rising wedge that I've been talking about on the daily chart. Watching, do we get red bars? Do we go a little higher, get red bars? We'll see what happens here. S&P 500 daily. Divergence is still very much in play here on the MACD. Talked about these weekly charts. Again, the awesome oscillator is forming a triple negative divergence. This divergence right here gave us this sell-off. This one will likely produce a reversal. You have triple divergence on indicators. You got it here on the MACD. It's all over the place. Very difficult to find an indicator that doesn't have a divergence or multiple point divergences on it on the S&P 500 weekly chart. So again, I will be looking for red bars to show up. Could be by the time the red bars show up, the selling already. Sometimes the bars show up, the red bars show up and start giving you a warning ahead of the selling. That happens from time to time, but again, usually it's associated with the selling. Like over here, we started getting the red bars and we had already moved off the highs. Started getting the red bars over here and we had already moved off the highs. Same thing over here, but again, this was the larger divergence that was forming. So the triple divergence is going to produce a reversal. And again, we have it all over the place on the weekly indicators. This is the awesome oscillator, again, suggesting a reversal. No, we know there's extreme complacency right now. The put to call ratio, this is a 10-day moving average. It's diverging with the July peak. Very similar to what we had over here. We had a sideways correction here early in 2024. And then again, a divergence marked the peak over here on April 1st. The S&P 500, but we're at extremes. Put to call ratio is considered a contrarian indicator because option traders get extremely bullish at tops and overdose on calls, and at bottoms they get very, very fearful. Moves up to extremes, that's where bottoms develop. When it moves down here to extremes, that's where tops develop. That was the equities put to call ratio. If we look at the total put to call ratio, kind of interesting long term. Again, look at the 2022 top. You had a low here with the 10-day moving average of the total put to call ratio. You got a higher low, and the S&P was making new highs. We got a higher low with the total put to call ratio when we peaked there in January. Same thing here going on. We had this low in July that marked the peak for the July 16th peak for the S&P 500. And again, we're getting this higher low right now, very, very similar to what we had back over here at the 2022 top. And again, equity put to call ratio, the total put to call ratio, they're showing that there's really no fear among option traders, that there's complete complacency, that there's nothing to fear, nothing will happen. This is what they thought at the 2022 top. Similar pattern here with the total put to call ratio. And in the background, you can see the raw data doing the same thing. Again, getting a higher low here, getting a higher low here. Very, very similar to the topping process in 2022. I've even talked about the price action on the S&P being very, very similar. Just quickly, again, I've talked about these divergences like on the RSI. Again, into a reversal like we've had at the 2022 top and the 2020 top. They led to significant declines. The bullish divergence led to a bottom. And what I'll be watching for is, do we go up and hit that upper boundary of the rising wedge one more time with the stochastic turning back up? Or again, do we start dropping below the 10, dropping below the trend line? And again, right here, the price action we have in the weekly time frame, we're slamming up right into that upper boundary of the channel. Still could go a little higher. NASDAQ overthrew the upper boundary of its channel, but again, we're coming up, slamming right into it. And let me just show you some of the other divergences that I'm looking at. I've shown you these, and if we overthrow this level again, hit that upper boundary again, we could do what NASDAQ did. But again, I am looking for this divergence to play out. This price action looks very, very similar to this whole thing. It looks very similar to this whole thing here, as I've talked about at great length and detail. The sell-off before the rally to a new high, then that lower high that set up, and then the rally to a higher high. Again, the sell-off before the rally up to a new high, the sell-off, the lower high, and then now the higher high. It's a little bit more exaggerated than this formation, but they do look similar. The triple divergences that we're forming over here, and again, right now, forming as well. Divergence here, and then the divergence here, the divergence here, and then the divergence here. Very, very similar on the RSI. Again, we had this larger divergence with the peak over here on both the MACD and the RSI. Same thing with our current price action. Looks like we're seeing the divergence complete on the NAAIM exposure index. This is showing what active money managers do. Again, it's the extremes or the divergences at extremes that tend to mark turning points. Divergence at the previous peak, the extreme at the low here. We recently have a divergence at the July peak with the previous peak there on April 1st. And again, a divergence in the more recent price action marking that April 1st, and then this lower high that's set up in July that marked that turn. So we had divergences here, we had a divergence here, and now we're getting another one, really a triple divergence, almost like what we're seeing on the MACD and other indicators in the weekly time frame. But we're turning down now. So again, this is likely now done. Again, that doesn't mean we still can't go a little higher. It may be that we don't. But if we start seeing indicators, seeing a sell-off in indicators, momentum start turning down, my guess is we're going to go out and hit the upper boundary of the rising wedge. I could be wrong. I have the guts to tell you what I think. Regardless, I'm looking for a top. This is suggesting, hey, maybe that top is coming to a conclusion now. So we'll be watching. And again, I talked about if we just start selling off and we have this peak hold, again, you can see an evening star. If we go a little higher, you can get a bearish engulfing. Over here at the January peak, we went just, it's hard to see on here, but we just went just a little bit higher. And that was the reversal bar there, that bar in early January. Said shows that the money managers, active money managers, are all in. They tend to be all in, possible worst time at the tops, and all out at the bottoms. So again, likely witnessing a topping formation here. We still have this really nice divergence here, and again, I've talked about the divergence we have right here in the most recent price action. The one over here that we had back at the July peak, the one back over here at the April high. Again, these divergences had formed just before the sell-offs. And the one over here, this one will likely produce a sell-off. This time it'll probably be a reversal because we're seeing recession indicators being triggered. Market will begin to price that in, but these divergences did play out very nicely for the corrective moves. Beautiful triple divergence on momentum here. Again, this is likely about to play out very soon, but as I said, predicting all-time highs. Do that in August. I told you it was still going to happen even though we started to sell off and we bounced off our 20-week moving average. And here you got a divergence here from the July peak. You got another divergence here right now here in October. Same thing going on here. And again, you even got one in the more recent price action right here. We're going higher, but the indicator is not. And again, a triple divergence has formed. Divergence over here produced this reversal. The divergence here produced this reversal. This one will likely do the same. The difference is this one will usher in a bear market. We now have recession indicators flashing. I've even talked about these divergences in the daily time frame. Again, you're getting a divergence here in the most recent price action already on the RSI, but you have this larger one right here. And again, that's from the July peak, and it looks very similar to what we have over here. I've talked about the January top. The RSI looks very, very similar. They got the divergence, the lower high, going back up and making the higher high. It's very, very similar. Perfect, but again, the price action even looks similar. So again, in both rising wedges going into the extreme peak with the divergences forming. Rising wedge plays out, we'll be watching the 200 period. If you take out the 200 period, this is a trend line to be watching right over here. Or if we exclude the shadow there in the weekly time frame, we got a really nice channel from the peak over here, which I've talked about at great length and detail. Warning signs as we're forming this rising wedge on the S&P 500. We have junk bonds diverging with the S&P 500. Now, this signal may change. Sometimes they do. The moment as we're just under the boundary of the rising wedge that I've talked about at great length on the S&P, great length of detail, we have this divergence. Again, If junk bonds moves to a new high, then that will go away. But currently, you've got a divergence. Last one gave us the pullback for the triangle on the S&P. Prior to that, they diverged during the summer sell-off. Again, this may change, but for right now, here it is. Again, oftentimes junk bonds and the S&P will diverge at turning points. Now, again, I personally believe that the S&P 500 is probably going to go up and hit this trend line one more time before rolling over, but it doesn't have to. It's just my personal belief, which I thought we'd get that divergence on the 60-minute chart. We ended up doing it, but we saw the rally begin to fade with making that divergence. And bullish insight day, we did see the stochastic turn back up. So my guess is we're probably going to do it, but I do think, again, as I've said, the time is short. It's a very reliable reversal pattern. Wouldn't be surprised to see the upper boundary reach next week and to start coming back down and taking out the trend line here. If that's the case, we could see a reversal start, and if so, I'll be watching my momentum signals on the intraday charts and on the daily charts. If you watch this video all the way through, you will see those indicators. We do have warning signs like here in the upper window I have the S&P 500. It's making new highs. And the lower window, when we look at the NASDAQ relative to the S&P 500, it is not. They are diverging from one another. This is what happened back over at the 2022 top for the S&P 500. This is marked other turning points, tops and bottoms over history here. Last divergence we had was at the July top for the S&P 500. Prior to that, the peak there on April 1st. Divergences don't always form, but they often do. And again, you can clearly see that we're forming a major divergence with the S&P 500, much like what we did at the 2022 top. Now, right now, we're in a period of very, very low volatility. That's likely about to change. We had the VIX get the 50, the green line, back above the black line. It's still there right now, telling us that a period of volatility is about to come in here. Happened, we saw the bullish golden cross there in 2022 with the sell-off there. In 2020 over here, 2018 with the sell-off right here, and some volatility in 2019 with some actions that have taken place. 2015 and 16, the sell-offs there. 2011, the 21% drop there. 2010, the flash crash right here, and then the bear market. The bear market over here, the sell-off ahead of the topping process in 2007, and then the completing of the topping process, again getting back up there, and then the counter trend, powerful counter trend just before the bottom fell out of the stock market during the financial crisis, rebounding, and then financial crisis getting back above it. But again, here we are above it. So again, we are going to see volatility. Now, as we're doing that, we have low volatility. I was warning you what's about to happen. The VIX showing here just the 50 and the 200, so you could see that, you know, when they get the golden cross, that's when the volatility shows up on the S&P 500, and that's exactly what we have right now. The herd is telling us, oh, nothing's going to happen. Here we have low volatility versus high volatility. So we know that, again, we've had low volatility, but we've seen a breakout of a bullish falling wedge here, much like we had over here just before the topping process. We broke out, and it completed the topping process with the breakout in 2022 on the S&P. The upper window is the S&P. Down here is low volatility versus high volatility. Again, a breakout. Again, very, very similar price action here, and then again the rising wedge here on the S&P 500, the rising wedge right now, the divergence is developing on indicators. And back then, same thing now, they're in the weekly time frame. So again, I expect high volatility will return, but again, this is suggesting a topping process. Pretty interesting. Again, if we look at the VIX relative to the S&P 500, P500 is making new highs. The VIX relative to the S&P is not. This is exactly what we had at the 2022 top. This is exactly what we had at the 2007 top before we moved into the bear market. We've also seen it at other turning points of the bull market in 2018, 2020, I mentioned 2022. We've seen this over and over again. It is at those divergences with the VIX relative to the S&P 500 where we've seen the 50 get back above the 200 on the VIX daily chart, and we've seen the volatility with major sell-offs, or we've seen the bear market in 2007. Again, the VIX is sending a message. It's giving a warning sign with that 50 above the 200 and with divergence between the VIX relative to the S&P 500 and the S&P 500 itself. If I bring this up close, this is the daily chart up close. Again, we've already seen the VIX relative to the S&P peak back in July, and it's now diverging with the S&P 500. Get up close here. You can see it with the top in 2022, January of 2022. Again, the very same thing happened. As I pointed out, the VIX 50 got above the 200 here. This is the daily chart. It remains above there. Now it's pulling back a little bit. We're back at 18. We're back testing the 50 period. Even if we drop below it, again, I talked about hitting the 200 or the lower band there. Closing just right at that 50. If we remain above the 50, then again, risk of more volatility at the S&P. If we drop below it, again, hit that upper boundary, rising wedge on the S&P, or even remain above the 50 period and still end up doing it. But the fact that the 50 is above the 200, warning something is setting up. Predicted a rally to new all-time highs. Talked about the sell-off over here. We bottomed. Shortly after that, my signals turned back to bullish. Predicted another sell-off over here. Predicted a bottom right here that we would see the following week. And again, the move up and the triangle that formed right there. And again, the rallies happened. I've been predicting the new all-time highs for months. I've been talking about the turns on my indicators with these back and forth moves. Now we're at the all-time highs. The NASDAQ's gone back and filled the gap. So I'm looking for volatility to return, and we know it's going to return because the 50 is above the 200, meaning this rally is likely doomed to failure in a too distant future here.